Welcome to the daily update, where we'll go over the action in the market for Thursday, February 10th, and then see how things look for Friday, February 11th. It was a pretty crazy day. We had the CPI that was released, and that showed that inflation was higher than expected. The markets were expecting about 7.2%, which, if you haven't been involved in the markets for very long, that is very, very high. But if you grew up, especially in the 70s, you're like, okay, we're just back to where we were before. And I'll have some charts that I'll go through and show some different things about that. But we are right at that overhead resistance, and we're still below it. And once the report came out, man, the futures just went crazy to the downside. The dollar shot up, the futures went down. Bitcoin was even taking a big hit there for a while. But then after the open, we saw this ferocious buying opportunity that some people saw, and we saw them really push prices back almost, well, they went positive briefly, and right at the unchanged level, which acted as resistance. We fell back below that, and then we hit a couple of other points that are pre-programmed into all these computer algorithms that do most of the trading automatically. Well, they're blaming it on the idea that one of the Fed people gave a speech and they didn't really like what that person said. Well, on the charts, we could see that unfolding, and they're just kind of using that as an excuse. And then the selling did intensify as the day went on. We went all the way down to S3 that I'll show you. And then we bounced up a little bit into the close, but we're still above 4,500. And even though it was a down day, there wasn't all that much damage done technically. How can I say that? Well, we've just been pushed down into the same range that we were in 2 days ago. And we tried to come up out of that. Well, now we're back down into that range, with most of our indicators not showing as much damage as you might think. So short term, yeah, we're looking a little more negative. In fact, as I record this, I just checked the futures before I started recording. We're down 0.85% in the overnight futures trading. Asia doesn't seem to be all that. In fact, they're positive. China, which doesn't really matter all that much, and Europe hasn't opened yet. So we'll just have to see how things play out with that. But there is some negativity being carried over into the futures market. We'll see how Europe reacts to the decline in the US market, because the US markets tend to lead and the other countries tend to follow. Sometimes the other countries will follow, but most of the time, the US is still the big player in this whole game. Okay, so let's recap what happened on Thursday. We'd had a big gap lower, but then we saw massive buying coming in right off the bat. And what it did is it filled the gap. And we went all the way back to the unchanged level. And as I said, even briefly went positive, but then we fell back from there. As the day went on, we sold to below the daily pivot level, which turned things even a little bit more negative. Once we dropped down below that, it then became resistance when we tried to come back up to that. And then there was strong selling into the close. We closed near the low for the session, but above 4,500, which is probably more of a psychological level than a technical level. Although with all this movement of prices, it's becoming more of a technical level. And we were down 1.81%. So a lot of the doom and gloomers that I follow, man, they're having parties right now. They think this is the end of the world is here. And this doom and gloom that I've been predicting for 15 years now is finally starting to happen. I don't see that. It's not that I'm an eternal optimist when it comes to the stock market. I am as a person, but in the farther out future, I see some real problems. But right now, we have to go with what we see. Yes, there are some real problems on the back burner that will play out into the future, but they're not coming into the market right now. So we have to go with what the charts are telling us. Volume was above average, where on Wednesday, volume was below average when we saw that pretty strong up day. Well, that's not necessarily a good sign when you see increased volume on a down day. So that's potentially negative. And the markets are still fixated on, yes, we are still seeing improving technicals in the intermediate term. Some of our short-term indicators got hit a bit on Thursday. We're still having earnings that are coming out. Inflation, this is the big story of the day, which then carries over into interest rates, and then the geopolitical concerns that continue to go on from day to day. So what are some things that we can say about this? I'm asking a question right now. Can the short-term and intermediate term breakout that failed on Thursday, is that an absolute failure, or is it just going to take a little bit longer before we have enough steam to actually go up through that? Right now, I think I would go with the latter. I think it's just on hold right now. That's just based on all the different things that I'm looking at. But we ultimately have to look at what price is doing. That's the number one factor. There are other people that are saying, no, this was a failed attempt. We're going back down and things are just going to get really ugly. Okay, I don't necessarily see it that way. If we continue to have more negative days, then yeah, I will switch my view. But I'm still sticking to the things that I've been sticking to pretty much all this week. We still have short-term overhead resistance at 45.92. We never even got up to that level. It looked like when we came back up to the unchanged level, not very far above that is this 45.92 level. But instead of breaking through and going up to that level, we stopped at the unchanged level and then turned back down from there. So we're still at a bit of an inflection point, not as strong as it was for Thursday's session, but it's still in play from what I can see. The initial reaction to this inflection point was negative, but without much damage. And I'll go and back that up with what I'm saying. We continue to be overvalued. We do see a weakening trend in spite of the downturn that we saw on Thursday. The trend continues to go lower or weaken. The bias switched from being positive yesterday to negative today, and the momentum is still basically positive, but now more mixed. Okay, so let's look at the day session. First, sentiment, no real extreme reading with the fear of greed index that we look at. The VIX, yeah, because we saw a decline, it went up on a closing basis. We're back above the moving average. We're well above 20 now. That's showing that there's increased fear in the market. And we closed just about at the high above the moving average on the daily bar. And the VIX of the VIX, it also shot higher, which should not be surprising. When things are going down, that's when people hedge their positions. This measures the amount of hedging they're doing. Okay, the different sectors, every one of them was negative, with real estate and tech leading the way lower. Utilities also really suffered as well. And then down at the bottom, some of the ones that didn't do as bad are more the value plays: financials, energy, and materials. They did less worse, if that makes sense. Then looking at things since the January 4th highs, energy still is in the lead, even though it's been coming down a bit, with discretionary taking a bit more of a hit on Thursday. Now, inflation, I'm going to spend a little time here today because we have some new information. The official report that came out said that inflation is at 7.5%. Okay. Well, in the context of the last 30 years to 40 years, that's pretty strong. But there's this other site called shadowstats.com, and they updated their charts. And this red and orange or yellow, it's kind of hard to tell which is which. That is the official number that came out. And you can see we're right up here at about 7.5. Well, if we go back to how the CPI and the inflation rate was calculated in 1990, we would be up probably around 12% inflation right now. They just changed the way everything was calculated to make it look better than it really is. That's not the scary part. The scary one is the next chart. If we go back to how things were calculated in 1980, because now you're hearing all these comparisons between the two, that inflation hasn't been this high in 40 years, 1982, 1983. Well, they calculated the whole CPI in a different way. And at that time, we were trending lower with inflation, where now we're trending higher. But if we use the way that they calculated this back in 1980, yeah, here's the red line, which is what they came out with on Thursday. But going back to how it used to be calculated, we'd be up about 16, 17% inflation. That is 1970s level. That is skyrocket high. So you have a lot of people freaked out over that. Is this going to take the market lower? It could. But right now, I'm still seeing some positive things that I want to point out to you before we change, or I change, my view on things. Now, the BDI, and I was trying to use this as a leading indicator, but if anything, it seems to follow what's going on. Where we were dropping off here, well, with the massive rise in inflation on Thursday, we saw a big uptick in the BDI. So I'm not sure if this is a very useful chart or not. Then this is a new slide that I'd taken away for a couple of weeks, and now I'm bringing back because the attitude is shifting. Look at this next chart, and I only have the next meeting that's coming out in March 16th, where we had pretty much put in a 90+% probability that the Fed would raise rates 0.25%, anywhere from 0.25 to 0.5%. Well, with this massive inflation that we're seeing coming back into the markets, they've now shifted over to a 94.7% chance that we're going to see 0.5 to 0.75% increase at the March meeting. Now, please understand, the Fed doesn't have to sit by and watch this happen. They don't have to wait until the March 16th meeting to do this. They can change rates at any time. If you recall, during 9/11, the markets were closed for a week. The Fed came in and lowered interest rates a full percentage point, but that pretty much went unnoticed. Number one, because the markets were closed. Number two, because of what the US was going through at that time. But they don't have to wait for the meeting. I haven't heard any talk that they may jump in ahead of the game. So far, they will wait until March, but we just want to keep an eye on this. But the reason I brought this up is we saw the shift. This whole column over on the left, that was the big column. Now it's shifting over to the 0.5% to 0.75% rise in interest rates at their meeting. Okay, technical alerts, they were pretty much negative, except for one little one right here in the middle, where the Nasdaq went above 14.5. But then as the day bounced around, the Nasdaq ended up dropping below different levels as well. With the S&P 500, yeah, we closed above 4,500, but we crossed below 4,500, right near the close. Looking at our intraday chart, yeah, here is Wednesday's action. We see the gap lower, which was right at about the unchanged level for the previous day. There's at the pivot level. Once these lines change, it's a little harder for me to figure this out. But we saw some initial, we came in right about here, and then we were able to shoot up higher. And then we just saw massive buying coming in for the first hour to about hour and 15 minutes or so that the market was open. And we got right back up to the unchanged level. That's this dotted line right here. And we briefly peeked our head positive. Well, as is what's very common, the gap was now closed between Wednesday and Thursday. And instead of breaking and going above this line that I have here, which is, I was waiting to see if that was what was going to happen, it didn't happen. We saw selling come in that took us down below the pivot and all the way down to S1, Well, we bounced back up off of that. And since we had broken support before, we came back up to this, and now this is resistance. We danced along here for a little while. And then right about in this time, as we started to go lower, this is when the whole Fed speak came out that made things look more negative. But you see, we were dancing this way. We were getting ready to go lower anyway. That's my take on it. But then we started shooting lower. We broke all kinds of levels. In fact, I had to put this line on here for S3 because that usually doesn't calculate on these charts. We came all the way down to S3. Isn't that interesting? See, these lines are on the chart before the day even opens. That's the thing that fascinates me. But then we saw a little bit of buying going into the close to push us back above 4,500. Okay, so looking at this on a daily chart, not much has really happened. We're like on a roller coaster now. You get on the roller coaster, you go all crazy, you're up and down, flipping all over, and then you get off at the same place where you got on the ride. That's pretty much what's happening here. We shot a little bit higher, we came down, went sideways, we shot a little bit higher, we came back down, and now we're just back in the same territory that we were in a few days ago. So that hasn't caused an awful lot of damage to our technical picture. We are down since the all-time highs of 6.1%. We're still in correction territory. We really start to take notice of this when it goes above 10%. Then growth versus value. Yeah, we saw a bit of a decline in growth, a bit of an advance in value, even though everything got hit across the board. And then looking at our growth index versus our value index, the growth declined and we're below the moving average, but the moving average is ever so slightly still sideways to slightly higher. The Nasdaq versus the S&P, with the Nasdaq 100 getting hammered on Thursday, we saw a decline in comparison to the S&P 500. As far as our trend, even though we saw a bit of an upturn with the red line, that's the selling pressure, the ADX itself is continuing to fall. It's below this moving average that I plot on here. And yeah, we saw a bit of a decline in buying power, but this continues to fall. So this is why I say we're seeing a weakening trend. And if you look at the chart, my goodness, we bounced around down here, shot a little higher, bounced around right here. So it's very undecided right now if we are going to go higher. I'm still kind of seeing these as plateaus or bases, if you will. No, plateau is if we're getting ready to go lower. This would be a base. We built a base right here that we've come up out of. Now we're building another base. Can we come up out of that is now the big question. Then the mass index, this is what I was talking about for the last few days. We crossed above 27, and then this will generate a signal when we go down to 26.5. So that hasn't happened yet. Then our decision point scoreboard that they have here, nothing has really changed here. Their trend models are neutral, intermediate and short term. Long term, they still have us up. The PMO signal's up, which switched a few days ago. Intermediate is down, long term remains in an uptrend overall. As far as our breadth, yeah, we saw some damage. There was significant downward selling based on price and volume. Did a little bit of damage to our price moving average, which is still above the moving average, and we still are below the moving average based on volume. The ADX, why do I call this the ADX? It's because it's the advanced decline ratio in AD. Okay. Anyway, because we had a down day, this has now switched to going over the red line, but we're still above this middle line right here. That's just a teeny tiny bit positive. New highs and new lows. Yeah, we saw there weren't as many new highs on Thursday as there was on Wednesday, but we still saw an increase. And so this moving average is still going higher, and our 10-day moving average is going higher as well. The accumulation, yeah, it dropped off because we saw a lot of selling, but we're still above this moving average. Our short-term charts, we were above the 20-period moving average before. Well, with this action, we dropped back down, and now we're using the simple moving average as potential support. And then our 20 period moving average inside the S&P 500, we saw a decline, 50 a decline, 200 a decline. So that's a little bit of damage that you can see here. Then as far as our moving averages, yeah, we're just treading sideways. The 200-day moving average is quite important. We remain above that, but we're just back into old familiar territory. We're saying hi to old friends here. The MACD continues to go positive, even though it wavered a little bit on Thursday. The STO, it went sideways. It's not really picking all of this up because it's seeing a lot of this sideways movement lately. The McClellan oscillator, it declined, but remains above zero. The Stochn RSI, which is very touchy, it's coming down and generating a second overbought signal. And the Williams %R, same thing. It's coming off and generating an overbought signal. Intermediate term, we are still below the 50-period moving average, and this could be acting as resistance. Either one of these moving averages could do that. Then I still have the 100-period up here just because we're chopping sideways. Well, we were above the 100-period moving average on Wednesday. We've now dropped below it, as well as being slightly below the pivot on Thursday. So yeah, some damage was done. You can't deny that. But our PMO continues to be positive, even though it's rolling a bit, but it's still positive. Our other PMO study, those that are rising, that saw a decline after showing a little teeny tiny bit of an extreme reading. So maybe one of the scenarios you can think about is some of the signals that I brought up in yesterday's video that show that we've gone a little too far, too fast to the upside. Maybe those are getting worked off a little bit before we get set to go higher. I'm not saying that's what will happen, but that is one possible scenario. Then the buy signals, it was flat, and we saw a flat, it pretty much went sideways as far as those PMOs that are positive. The BPI didn't really generate anything new. We saw a lot of new buy signals on Wednesday, but down just slightly with the BPI on Thursday. Our moving average rainbow, yeah, these lines continue to cross as we remain below these moving averages, but still we're right in the middle of what's happening here. Things have not turned decidedly negative, at least yet. The Stochn, this had shown an extreme reading on our short-term stochastics. That's coming off now. We're still going just a little bit higher with the intermediate term, and we're seeing a little bit of a rollover here, but it's still positive with the longer term stochastics. Summation index, it went sideways, but is still going higher based on price and volume. Then our momentum oscillators, these continue to still be positive pretty much across the board. Doesn't mean they aren't wavering a little bit, but they're not rolling over the way you would expect to see them if we were fully getting ready to steam to the downside. Then another thing I want to point out with the CMF, the Chaikin money flow, yeah, it's still positive, but it did decline after Thursday. And then this one I'm keeping an eye on too. We've got the Pring bottom fissure where it crossed positive. Well, it's continuing to go higher. And if you look back in time, when these cross, it doesn't necessarily mean that something happens right away. This is more of the positive backdrop that I'm still hanging on to for right now. And then I showed this chart in yesterday's video where we had an extreme positive reading with the rate of change going back 10 periods. It came down off of that on Thursday. Same thing with the CCI. It's coming off just a teeny tiny bit of an overbought signal. RSI, it had been positive on Wednesday. Well, we dropped below 50, so it has a negative bias. That's where we're getting more of the mixed picture right now. And then this is interesting. I really didn't expect this before I saw this chart, the vortex, where we're coming down with the buying power going up and the selling power going down. We actually saw a cross. We were right camped on this line after Wednesday. Well, even though we're not seeing a decisive breakthrough, these lines did cross positive. So that's more of leaning in the camp of this positive backdrop I've been talking about. And then another thing, I haven't brought up this chart in a while, where when we were really racing down, we saw standard deviation just spike up. Well, because we've been chopping sideways, the whole standard deviation, which acts like a rubber band, it's how far are we deviating away from the standard price or the average price. Well, we're back down to this moving average and it's starting to drop below it. So we're not showing a really fast market right now, which you can see just by looking at the chart because we've been treading. But this indicator is picking that up. As far as our trading systems, with the Elder, which is more short term, it switched back to a red bar because we had this strong down day, but the SAR remains positive. It's a little more intermediate term. Our different charts, the Heiken, I always have to remember, I don't know if it's a Heiken or Heiken with this chart. Heiken Ashi. Overall, it's kind of putting it's not really a doji, but we have an open and a close right on about the same line right now. So it's not really registering anything new because we're going sideways. Nothing really changed on the Kegi chart. We're still black, which is positive, even though it came down just a little bit. The Renko chart, it hasn't changed at all. It still has this one little box that was put in here a few days ago. 3-line break is also looking fairly positive right now. The equi-volume, it's down, but just showing that we're back in this whole mess that we've been dealing with now for a few weeks. Point and figure, no change here. It's still suggesting that we could be looking at a double top breakout, which we could see these prices go higher this way. Our long-term charts, I do have one. This is interesting too with the special K, the breakfast that we eat here. And even though we saw a big down day, we're starting, and this is negative, but we're starting to see this indicator turn up slightly. And this doesn't give very many signals. And you can look at this on the longer term chart. Yeah, when we had the whole COVID plunge, it was very negative. Well, it hasn't given a signal since then. We crossed below here, but we're just ever so slightly turning back up. It's going to take a few days for this to actually turn back positive, but just the fact that it is turning up a bit, I think is somewhat positive. As far as the broad market, S&P, we shot down into this little higher range that we've been battling. The mid caps, after seeing what could have been a breakout on Wednesday, shot back down, actually filled this gap right here. And then the short term, the small caps, they shot lower as well, and they're back more in the same mess that they've been battling with for a few weeks. Now, this is potentially negative because these are the FANG stocks, the big tech people, and we have seen a cross. This is the death cross here. And we saw, a lot of sideways action, but we closed not at the low, but near the low on Thursday. ARC, you can kind of guess it had a pretty negative day. It was down over 3%. So there's a hole in the boat, at least right now, in this stock. And then with the Dow, this is interesting too. We had been above the pivot. We had been above the moving average. Well, we came right down to this pivot point. Don't you think these things matter? Yeah, and we bounced a little bit up off of that. Then the small caps, well, we broke below the pivot point, but we're now more into the sideways mess that we've been in. And then the mid caps, they also came down to the pivot. Isn't that interesting? The Nasdaq, which has a lot more longer term damage done to it and a lot more sideways action, it broke down below the pivot and has gone back down into this sideways action. Nasdaq 100, it saw this pivot as overhead resistance and then broke down as well. The Vixen, where with the decline, we saw a real increase in the fear gauge as far as the Nasdaq 100 is concerned. The NYSE, we're still above the 50-period moving average, and we're still above the pivot, and the red line is still above the green line. The Wilshire, we're just a little bit below the pivot line, and we're below both moving averages. So that's more of a mixed picture right now. Then looking at some of the international markets, China's kind of floating sideways. The emerging markets they're trying to turn up just a little bit. Europe is trying to turn up a little bit. Japan is trying to turn up. And the S&P continues to turn up. This is a more slower moving or more slower oscillator that I plot on here. It's the KST, and it doesn't move really, really fast. Then looking at our alt stocks, I was pointing out in yesterday's video that we come right back up to the 50-period moving average. Well, boom, we now went down to the 200-period moving average. So we went from resistance down to possible support on this chart. As far as our broad market, the dollar, man, it was just gyrating all over. As stocks were going down, the dollar was going up, and then vice versa. Overall, we were almost unchanged. We were up just a little bit on the daily chart. We're still in an overall uptrend, but we're below this moving average on the weekly chart. Oil, it was up, but it's still below 90. That seems to be kind of a big thing right now, the 90 level. Gold, it was floundering all over too, but ended up being down on the day, a little over 1/3%. Silver got hit a little harder, down about 0.5%. CRB was down just about 1/4%. So not much of a change there. And then I have to look at this just because it's interesting. Bitcoin, it's coming back up, and it was dancing all over on Thursday too. But this is the end of day chart based on the New York index that I post here. And we're just about at what potentially could be overhead resistance after we're seeing the death cross, at least on this chart. On different charts that show more information, we crossed before this. As far as bonds, this is one thing I want to keep an eye on. I haven't shown this chart in quite a while here, but we're seeing a real decline in the yield curve between the 10-year and the 2-year. And I've been watching as this has been falling. Well, after Thursday's action, we saw a big fall with that. Where we want to really be concerned is that this could be suggesting that the economy is getting weaker. And then if we get below this, it might signal a recession. That's when we see an inverted yield curve. And unfortunately, the media has kind of picked up on this, and they run it for all it's worth. And so it doesn't have as much influence as it used to, although the last time they picked this up, not too long after that, was when we had the whole COVID problem right back in here. And it didn't stay inverted for very long. But we just want to keep an eye on this. Then as far as our US interest rates, they shot up on the 30. They went actually above 2%. That was big news in the media. Woo-wee. And then even the 5-year is really shooting up too. And we saw a huge increase here in the 2-year. Then this is why we're seeing the yield curve go down overall. We're comparing the 10 to the 2. And then we really saw very short-term 3-month interest rates really shoot up higher. Internationally, the US still has the best interest rates out there, but they continue to go up overall, with Japan and Germany finally looking much more in the positive territory as far as interest rates are concerned. And then as interest rates go up, bonds continue to go down. And then our corporate bond index, it continues to fall as corporate bond interest rates rise. So what can we look for on Friday? Again, I'm asking a question. Can the improving backdrop remain? If we see a lot of continued selling, no, we're going to lose that positive window that I've been seeing. We have to go with what's happening in the charts. But it doesn't mean that we have ruined that picture yet. It's just got a little dirty right now, at least from what I see. The long-term trend is up, but showing signs of weakness. And again, in one of the weekly or monthly videos that I do, I'll dive more into what I'm seeing when I say signs of weakness. We're still in the middle of earnings season. We're still battling between growth and value. And then, as I said, it's probably changed now, but when I checked, the overnight futures for the S&P were down 0.85%. We do have a pretty important report coming out on Friday, and that is the preliminary reading of the consumer sentiment. And I believe that comes out at 10 a.m. Eastern time. And then we have the geopolitical events, Russia, Ukraine. Are they going to start a war? Are they going to invade? What's going to happen? Is U.S. sending more troops? Blah, 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 blah. We still have the Olympics going on, and then the Iran meetings. Nothing has really changed yet, but they're still happening right now. So our conclusion is we're positive to mixed with the S&P. There's still that possible upside breakout that still might play out. It is possible. And then this inflection point that I brought up in yesterday's video, the initial reaction to that has been down, which is fairly obvious. The short-term bias now has switched to negative, but the intermediate term bias is mixed even to slightly positive. After looking at these charts, the long-term bias remains positive, but showing weakness for right now. I'm not worried about the long term yet. I'm just trying to get through the short and intermediate term for right now before I really start dealing with the long-term issues. So thank you very much. I hope you have a wonderful Friday. I will prepare the next video over the weekend for Monday. It might be a little bit longer video as I dive into a few more charts, and I get a lot more people that watch those videos. So I'm going to try to add more things into that. So have a wonderful weekend, and I'll talk to you again over the weekend.